The money flows going into utilities and consumer staples, and the big pop we had in precious metals is kind of a euphoric phase. All of those are telling me I believe the market is more so ready to sell off and roll over, both equities and precious metals, and the dollar goes up. But again, we just have to let the market lead. We don't need to try to guess. We just need to know what the two outcomes are and have a game plan so that we're not sitting on the wrong side and holding it if the market goes in a direction that is not what we're expecting or positioned for. Equities are trading slightly lower this morning, down about 0.5% or 0.4%. We've got the dollar up 0.2. We've got gold relatively flat and silver up about 0.5%. Oil up 2%. And other than that, not a whole lot going on. When we look at the overall equities market yesterday, we talked about how the market kind of dipped into this overbought territory. That usually means when we have red bars, that could become a pivot point, meaning the market could start to go a lot lower. Usually it runs out of steam. And we did see that it got overbought. We had FOMO, meaning people were covering their shorts. People were piling in, most likely because we broke a short-term pivot high. And people want to jump in and try and catch that move. But when that amount of people move in with the same amount of force, with that amount of force, a ratio of 3 to 1, usually we see the market start to roll over. We did see this over here the other day. It got back up close to this area. Market put in a top and then sold off. But now what we're looking at is potentially the markets could have a bigger, much bigger pullback if all that unfolds. And when we look at the S&P 500 daily chart, really, we have just been chopping sideways for a long time. Lots of volatility, hitting, here's an all-time high, nominal all-time high, another nominal one, another one, and it's making some lower lows. It's definitely creating what is called a broadening formation, megaphone. Not ideally the best pattern. Usually it's showing what that means is there's increased volatility, bigger waves of people buying, bigger waves of people selling. And that just means there's a big push and pull going on, and it does exhaust the market usually, and it usually resolves to the downside. So we've had this sharp move down, this kind of bearish looking move across all the indices we touched on yesterday. And the fact that we are somewhat, not with the S&P 500 just yet, but with the Nasdaq, we are in a downtrend. We're seeing that this was very muted. It bounced up a little bit and got sold into, and that could point to a lower move going forward. Now,
when markets stretch too far, too fast, momentum can become fragile. Recent rallies were fueled by short covering, breakout buying, and fear of missing out. As prices pushed beyond short-term resistance levels, participation surged. Historically, when buying pressure becomes crowded, reversals often follow. Volatility expands, swings grow wider, and what technicians call a broadening formation begins to take shape. This pattern reflects emotional trading, strong bursts of optimism, followed by equally strong waves of selling. Such formations rarely resolve peacefully. More often, they exhaust buyers and tilt the balance toward a deeper corrective phase.
This FOMO buying also carried over. If we take a look, this is the QQQ chart, which I just showed you, but more or less, if we look at this one, is the bottom chart here is silver. And you can see when we have mass kind of market participation and everybody's kind of in the same move, and it's a broad market move, we tend to see the same things happen with precious metals. So silver moved up. We did see FOMO, people willing to buy pretty much everything, including precious metals. 3 days ago or so, this one was yesterday, the market moved up, and we could see that want to move down. And this is very narrowed in. This is obviously a 30-minute view, but this just goes to show, I try to keep showing different angles of this, of how when there becomes broad market moves, precious metals move with it, meaning there can be FOMO and everybody buying stocks and also moving into precious metals. But when we get into a bear market, eventually we will get into a big, bad bear market. Gold and silver will do the same thing. When stocks are crashing and there's panic selling and all of that stuff, it will pull metals down. And so metals are not immune. They just perform well just before the stock market or some recession or some big financial news hits and crushes the market.
While the S&P 500 continues moving sideways, the Nasdaq has already shown early signs of trend deterioration. Technology shares, which led much of the previous rally, are beginning to struggle. Lower highs and muted rebounds suggest institutional sellers may be distributing into strength. This divergence matters. Historically, when leadership sectors weaken first, broader indices often follow. The transition from bull phase to corrective cycle rarely happens overnight. It unfolds gradually, first through reduced upside momentum, then through failed rallies. These subtle changes in structure can signal that a larger recalibration may be approaching.
So let's dive into some of the other charts real quick. Let's take a look at the dollar. It's up 0.25% this morning, having a nice move. Now, yesterday, the dollar posted a really strong move to the upside, and precious metals moved up as well, which I find very interesting. I think that's kind of a pretty rare one-off that they both have a strong move to the upside. Dollar is extending, starting to break above this. The dollar is showing that if we use a Fibonacci extension based on this drop, this rally or pop here, and this low, we could see this easily come right back up to this 100% measured move. Right now it's at the 618 level, so it might want to pause here for a bar or two. We'll have to see how that unfolds. It's also a previous high, so there's no doubt it's double resistance. Fibonacci momentum is running out here temporarily, plus it's a previous high where there's past sellers. But overall, it is showing we could see this move up like about 1%, just over 1% to the upside, which will bring us up to this previous high.
Gold and silver often benefit from optimism and liquidity-driven rallies, but they are not immune to risk-off shocks. During broad speculative surges, capital flows into multiple asset classes simultaneously. Yet when fear escalates, forced selling can pull down metals alongside equities. History shows this dynamic clearly. During the early 2020 liquidity crisis, both stocks and precious metals initially fell together before diverging later. Silver, especially, tends to exaggerate moves due to its dual industrial and monetary nature. Its recent volatility suggests heightened speculation, making it vulnerable to sharp swings in either direction.
And if this does break and clear, that could put more pressure on metals. If we zoom out on the dollar, we could see it is trying to, you could argue this is potentially a very big basing formation, and there's still a lot of room for this to kind of mature. This could work itself around and then eventually work itself up, and then when it kind of breaks out of this pattern, that could be some bad news hitting the market. This will be when precious metals probably really start to go for a swan dive, and they'll probably be affected with the stock market going down and pulling precious metals. So anyway, that's just kind of what I think is potentially unfolding here. There is the other view as well that this could be a giant bear flag, and we could eventually see the dollar break down in a big way and have a huge leg to the downside, and that could send precious metals sharply higher. So we are in this pause, this consolidation. The money flows going into utilities and consumer staples, and the big pop we had in precious metals is kind of a euphoric phase. All of those are telling me I believe the market is more so ready to sell off and roll over, both equities and precious metals, and the dollar goes up. But again, we just have to let the market lead. We don't need to try to guess. We just need to know what the two outcomes are and have a game plan so that we're not sitting on the wrong side and holding it if the market goes in a direction that is not what we're expecting or positioned for.
The U.S. dollar remains a critical driver of global asset pricing. Recently, it has shown signs of strength, potentially forming a larger base. If the dollar extends higher, it could pressure commodities and risk assets in the short term. However, alternative scenarios remain possible. A breakdown in the dollar, especially amid shifting Federal Reserve expectations or renewed fiscal stress, could reignite upward momentum in metals. With global debt levels elevated and central banks still managing inflation risks, currency movements may become increasingly influential in determining whether precious metals consolidate or surge.
So when we zoom back on the gold chart, you can see it has a series of rally, pause, rally. This could be a pause, this could be a top. It looks pretty bearish in terms of the way the price action has unfolded, but overall this still could work itself out and build a launch pad, and then we could start to see this run and go higher. And so that's what we just need to wait and see. The long-term trend is still up. The short-term trends and patterns are pretty bearish, showing signs of a peak. If we look at silver, very similar, obviously much more of a blow-off phase. Everything kind of got muted with that move, but it has definitely meandered around a lot more, had a lot more volatility, but it definitely has taken off, and a lot more damage has been done to this chart, and it's still not finding a bottom here at this point and could very easily roll over and sell off into like a bleed out, a slow bleed out. It could have a very sharp drop. This could be a high momentum move, and we see it have a very quick sharp drop down to 50. Or it might start to build an impulse move and have a nice strong pop to the upside, build a launch pad, and then maybe it wants to continue to go a whole lot higher. Again, it's not about us picking and trying to guess where it's going. It's about following price, making sure we're not holding something if it is falling, and to get repositioned if it starts a new uptrend that is tradable, that gives us a good opportunity going forward.
Markets now sit at an inflection point. Gold's long-term trend remains intact, but short-term patterns show vulnerability. Silver's structure appears even more fragile after its accelerated climb. The path forward may involve a controlled consolidation or a sharper corrective phase. Rather than predicting direction, disciplined investors focus on confirmation. If trends strengthen, they participate. If breakdowns occur, they preserve capital. Volatility often precedes clarity. By understanding both bullish and bearish scenarios, market participants can adapt rather than react, positioning themselves strategically in what could become a defining phase for global financial markets.